Well, it's 32, so let's start. So, as I said, yeah, tonight we are going to see how to trade with Fibonacci, retracements, and extensions. Very convenient tool if you want to make a strategy, a trading strategy. Here's the introduction. So, Fibonacci indicator is used to determine targets using extensions, to determine resistances with the retracements, and supports with retracements as well. As you know, the exchange rate used to form consolidation, correction, bounce, and breakout. This is its behavior. And so with Fibonacci indicator, you may anticipate those consolidations, corrections, bounce, or breakouts. It's a tool to anticipate exchange rate behavior. And as I wrote, Fibonacci indicators allows you to forecast the behavior of the exchange rate. Therefore, it will help you to define a trading strategy by anticipating movements. So, to start the Fibonacci sequence and the golden number. Here are the Fibonacci numbers. It starts with 0, 1, 0 plus 1, 1, 1 plus 1, 2, 1 plus 2, 3, 2 plus 3, 5, etc., etc. This is the Fibonacci sequence. And if you divide a number with its previous number, so for example 34 divided by 21, the result is 1.619. If you divide 55 by 34, it's 1.618. The same result for this ratio. Here it's the same. Once again it's the same, etc., etc. So here there is a remarkable characteristic. This numerical sequence is that each number x is approximately 1.618 times greater than the previous number. So this number 1.618 is called the golden number. This is the golden number, and with this golden number we may calculate Fibonacci retracements and Fibonacci extensions. So, how do I calculate retracement? I take a number and I divide it by another number. So, first example, 55 divided by 234. Okay, this is 1, 2, 3. Third number after 55. The ratio is, it's not the percentage. First result, it's a ratio and then a percentage, 23.6%. And then 55 divided by 144, the second number after 55. It's 38.2%, and the last retracement, 55 divided by 89, it's 61.8%. Here is a screenshot from my platform, and you can see those retracements: 23.6, 38.2, 50. Basically, 50 is not Fibonacci retracement, but this is the average between 0 and 100. So this average is used like an indicator to get the balance. So 23.6, 38.2, 50, 61.8, the last retracement, and 100. And then the extensions. First extensions, it's 89 divided by 55. So the number divided by the previous number, 89 divided by 55. Here, the percentage is 161.8. This is the first extension. And then 44 divided by 55, the second extensions, which is 261.8. And once again, you can see them on the screenshot. The first extension is there, and the second extension is there on the support. But what about Fibonacci? What is this? Fibonacci in nature, as I wrote, for reasons that are so far unclear, those ratios seems to play an important role in the stock market, just as they do in nature, and can be used to determine critical points that cause an asset's price to reverse. Here it's an example about the galaxy, a picture of the galaxy. And you can observe this circle. And this circle is respecting Fibonacci. Here it's Fibonacci applied to geometry. And you can see there is some square, 1, 2, 3, 4, 5, 7, 6, 5, 6, 7. And here you can see once again the Fibonacci circle. This is the same from the galaxy. And by the way, this is the same that you can observe on snail. On snails, it's quite the same form. Also, Fibonacci is used in meteorology and architecture. On the left, an example, a well-known example from the Parthenon in Athens. And Fibonacci is used in architecture. Why? Because it respects proportionality. It's about proportionality, though aesthetic matters. And on the right, this is a picture from it was on the US coast. And as you can see, this cyclone, no, it was a typhoon or a cyclone, anyway, it's forming exactly the same circle than Fibonacci. Exactly the same. So Fibonacci can be used for meteorology purposes as well. So architecture, nature, meteorology, and trading as well. And that's why it's so interesting. Here an example, it was on USD yen, a daily chart, and Fibonacci was really useful to determine resistances and supports. The first retracements, 23.6, was used to define support. As you can see, the exchange rate bounced 2 times below the resistance. Yeah, sorry for that. So the first time here and the second time here. And then the exchange rate penetrated the second retracement, but we bounce on 50, 3 times. First bounce, second bounce, and third bounce. So in this situation, as you can see, Fibonacci retracements were very useful. Very useful to anticipate bounce below resistances or on supports. Now, a second example in a present trade. So here I took the start of the trend and the end of the trend. Okay, and as you can see, the exchange rate first penetrated the first retracement at 23.6, but finally bounced below the second retracement at 38.2. So here, for example, at this price, it was around 24.8, let's say 24.8. I could short. It was silver. Yeah, I could short silver because the exchange rate was below the second resistance. The second retracement, sorry, which was a resistance, a potential resistance. And then also you can apply Fibonacci on a technical bounce. What is a technical bounce? Here you can see this is the start of the trend, the end of the trend, and here you can see a bullish impulsion. This is a technical bounce, bullish technical bounce. So you may apply Fibonacci on this technical bounce. You start from the end of the bounce to the beginning of the bounce, and then you can get the extensions. First is extension is there. So what's going on? The exchange rate is penetrating all the retracements. We even penetrated 100, and after this penetration you may anticipate a continuation to the first extension, 161.8. And what happened? The exchange rates reach 161.8. So after this break of 20, 20 it was the price, after the break of 20, you may short the silver. And just after the bounce on the first extension, you could have buy the silver. Now, in a trend, if the consolidation doesn't exceed 61.8, so the last retracement, the trend still valid. Here an example. So I took the start of the trend and the end of the trend, and then I get the retracement. The exchange rate penetrated the first retracement, the second one, and we finally bounce on 50. Okay, so this trend, this bullish trend, still valid because we didn't break the last retracement. So we may anticipate a continuation of the trend. And this is what happened. Yeah, so we can anticipate a continuation. This is what happened. We bounced on 50 and the exchange rate did continue to grow. It was still bullish. And if we break 100, therefore the target is the first extension. Yeah, I already spoke about that in this example, but it's another good example. So here I took the technical bounce. This time it is the contrary. It's a bearish impulsion, so bearish technical bounce. The bullish trend was there, the start of the bullish trend and the end of the bullish trend. Bearish technical bounce, so you may apply Fibonacci to the technical bounce. And here, once again, you get the extension. So, as you can see, the exchange rate bounce below 100, bounce on 38.2, and finally, you can appreciate the breakout, a breakout over 100. And you can anticipate a continuation to 161.8, and this is what happened. As you can see, we reach even 25. So, yeah, about the last retracement, 61.8. What would happen if it breaks the last retracement, 61.8? So here you can see the exchange rate is breaking 61.8, so we may anticipate a reversal. So here it was a bit tricky, but we finally reached 100. We broke 61.8, we bounce, I don't know where, we bounce I don't know where, but we bounce below the first retracement. We bounce again below 21.5. We bounce below 50, 50%. And finally, we broke 61.8 to reach 100. So to reach the start of the previous trend. Here it was the bullish trend, and here the bearish trend. So usually, if you observe that the exchange rate break the last retracement, you may anticipate a reversal, a reversal of the trend. So here it was a reversal from bullish to bearish. No, not the conclusion yet. I'm going to show you some really interesting example on Euro USD, GBP USD, and USD Yen. So here we are on Euro USD, and by the way, it's up to date. It's very useful because it's applied to the last day of Euro USD. So what did I do, by the way? I'm going to delete my Fibonacci. So on your MT4, you select Fibonacci retracements, Fibonacci tool, here, left click, and here, if I want to get the retracements, I apply Fibonacci to the previous trend. So I start here, and I finish at the end. The start of the trend, bearish trend by the way, and the end of the trend. And here I can get the retracements. So as you can see, the first retracement was not really useful. Yeah, we got one bounce here, and another bounce below 38.2 here. And now what's going on? The exchange rate is not bouncing, but it's consolidating below the last retracements. It's consolidating below 61.8. So here, at this position, exactly here, I can draw a resistance. Thanks to Fibonacci, I draw a resistance. So, yeah, I drew a resistance, but what is it so useful? Because if the exchange rate stay below the resistance, you can anticipate a bounce below, so you may anticipate a short strategy. But if the exchange rate break this resistance out, if you break it like that, at this moment you may apply a long strategy. You may buy Euro USD because you are anticipating the fact that the exchange rate will reach 100. So the beginning of the previous trend. So now I think you understood that Fibonacci is very, very useful to establish to get a decent trading strategy. And now another example. So here it was an example on Euro USD 1 hour, and then it's an example on the cable GBP USD 4 hours. So in this example, I took the technical bounce. Here you can see the bearish trend, a very vigorous bearish trend, and I apply Fibonacci to the technical bounce. Here you can see a bullish technical bounce. So what did I do? Once again, I'm going to delete it. I select Fibonacci. I start from the end of the technical bounce, and I stop here at the beginning of the technical bounce. And here it's very, very interesting. Why? Because the exchange rate first bounce below 100, bounce on 50, bounce on 50, and finally broke 100. So here we had a nice bullish opportunity. Just after the breakout, you may buy GBP USD, anticipating continuation to the first extension, 161.8. So once again, the extension was really useful to apply a long strategy and to get a target. By the way, we can draw once again a resistance just on the first extension. And yes, we once again bounce below the first extension at 10 pips, yeah, 10 pips, and once again, as you know, it's bouncing below. It's not done yet, but it's bouncing. And now my last example, very useful once again because it's up to date. It's on USD yen. So a good way to get retracements, so to get supports and resistances. And what can we see? So I apply Fibonacci from the beginning of the trend to the end of the trend, and as you can see, the exchange rate broke the first extension, broke the second one, and finally reached the last retracement. It bounced on the last retracement, 61.8. So here I could buy USD yen, anticipating a bounce, and this is what happened. And now, as you can see, the exchange rate is bouncing below the first retracement, 23.6. So here there is two options: below 23.6, which is used now like resistances. Below the first retracement, I would sell, I will go short, and over the first retracement, I will go long, I will buy USD yen. Well, it was my last example, so now I guess you understood why Fibonacci is very useful to establish to make a trading strategy. Conclusion, outputs. Normally, now you know how to use Fibonacci indicator, you know retracements, extensions, you know how to determine supports and resistances using retracements, but extensions as well. You know how to anticipate continuation, trend continuation or trend reversal, and how to fix a target using extensions, especially extension, but retracements as well. So now, if you have any questions, don't hesitate to send them through the chat. And by the way, in 2 weeks, next week, there is no webinar because of the schedule, but in 2 weeks, I will be presenting a new webinar dedicated to candlesticks. You know, candlesticks can give you some information, some key information to, once again, anticipate exchange rate behavior.